the management of eMudhra. Remember, the stock is under pressure today. We have Venkatraman Srinivasan, Executive Chairman at eMudhra with us. First of all, so apologies for making you wait. We just had the numbers of Maruti that flashed on your screen and we had to address that. We understand that there was a one-off impact on your margins in this particular quarter. What led to that particular impact as far as EBITDA margins was concerned? And Q4 and FY26 onwards, do you expect that to revive?
Yeah, there are 2-3 aspects which are there. One is because from July 2024, the Controller of Certifying Authority has passed a new model of sale. Before that new model came, we were selling the stock and a lot of stocks were in the market. So gradually those stocks has to be absorbed back because now they have prohibited the stock sale. So that almost affects almost 3 crore per quarter. This is one thing. And the other thing is the stock option. Though we have a stock option trust and all the shares, whatever stock option we are giving that were transferred to the trust, whenever we give, we have to make a provision for that. Also, it is just debited to profit and loss account and credited to reserves kind of thing. So all these, then we did one acquisition. So in that, some portion of the consideration got deferred. So that deferred consideration also, they calculate interest. The consideration itself deferred, but as per Ind AS, that some portion has to be attributed to interest on the deferment. So all these kind of things almost impact some 5 crore in a quarter. So this is one thing. Then the second thing is generally this Q3, Q2 is a seasonal quarter. So where the digital signature sales are very high, Q3 is a non-seasonal quarter where the digital signature sales go up. So these are the things which has impacted the current quarter. But still, if you see, the growth has been there compared to the last year Q3, and out of that the organic growth itself is 25%, balance 15% inorganic growth. So that way the growth has been there. The EBITDA margin again, if all these things are taken care of, it will be nearer to not EBITDA margin, net profit margin maybe around 18 to 19%.
By when do you expect? Right, Mr. Srinivasan, by when do you expect this to normalize, sir? These ESOP costs, the provisions that you are making for them, and the interest as well with regards to the acquisition that you have made. When does all of this normalize for the company to return to the normal growth trajectory?
It will take another 2 to 3 quarters. So mostly by September it will normalize.
Okay. So, Mr. Srinivasan,
gradually it may reduce, but will completely go off in September.
Okay, Mr. Srinivasan, first off, correct us if we are wrong. At the start of Q1 or at the end of Q1 rather, you had given a revenue growth guidance of 25 to 30% for FY25, EBITDA margin guidance of 30%, which we believe may be a couple of quarters away, and net profit margin guidance in the range of 18 to 19%. So what is the revised guidance for all three of these key metrics at the end of Q3?
No, the 25% revenue growth, more than that will be achieved. Because if you see, last year we were 375 crore. With 25%, we should have gone to 470 or something. Today, we may achieve around 510 to 520. So that is where we can go. Similarly, the net profit margin, again, when we gave this 18% was on the old model of sales where net sales we were making. Now what is happening, we have to make a gross sale on digital signature and pay commission. So that also a little bit improves the turnover. And again, one more aspect came this year is the income taxation in Dubai. With that, we have already told instead of 20%, we will come to a net profit margin of 18%. So if you remove this one-off cost, we will still be at 18%. With all this one-off cost, we will be at 16 to 16.5%.
One final question from my end, Mr. Srinivasan. What is the India to international revenue mix for the quarter? And there has been a lot of emphasis on the North American market as well. If you could share numbers on the mix and where do you see that going forward? And if there are any more acquisitions that you have in the pipeline?
International is gradually growing more and more compared to India. So India market this year, because the DSC sales is also lower by 5 crore. The total India market sale was around 42 crore or something like that. The balance 94 crore came from the international market. And the international market, our penetration is increasing because, for example, we have gone deeper and deeper into Philippines and Malaysia, then South America also we are going more deeper. Then Europe also we want to go. So India market, Maybe at best 10% growth or 5% growth year on year can happen, but international market can go in a bigger way.
Thank you so much, Mr. Srinivasan. We understand that you're likely to exceed the guidance for the top line as far as FY25 is concerned. Wish you the best for Q4 as well as FY26. Well, the next management on the